Righty. Let me turn down that music. Guten Morgen. Oh, let me get rid of that. Oh, here we are. There you are. Where'd you go? Anyways, good morning. It's Tuesday. Is that right? Wow, it's Tuesday. Welcome to QuantBox Live, where we get our global macro on and uncover the best fundamental investment opportunities across global markets. Stock indices, gotcha. Gold, oil, dollar, gotcha. Forex, gotcha. And a whole bunch more. You want some crypto? Maybe coming soon. Anyways, my name is Wayne McDonald. I'm the founder. I have a macroeconomics degree from Harvard. I have a master's degree as well in financial management. Very cool. I've been trading for over 20 years in forex and futures. And then even before that, I was a venture capitalist. So I like finance, but I like to try to uncover the why, the giant why. Why are things happening? And from there, I make investment decisions. And so many years ago, I realized that's from fundamental analysis and macroeconomics. So, anyways, QuantBox automates all this for you. So instead of trying to manage a spreadsheet of hundreds of data points and update them all day, every day, 24 hours a day, you can just automate it. Very cool. If you're watching this on YouTube, guess what? The video you're watching is free. Oh, yeah, it is good. It is useful, but it is also delayed. And you don't have direct access to the database. So why don't you swing on by quantbox.co and take a trial? $8 for your first week, and you get lots of pretty colors. Imagine the ability to organize all your thoughts, but of course, all this data is updated in real time for you. Huh? Very cool. So, with that being said, let's move on.com. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay, let us go into QB Pro. La 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 la. Pom 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 pom. All righty. Very interesting. The first thing I look at is the 10-year yield. Maybe I should switch them and put it over there. No, I always go right here first. In particular, if you're a forex trader, what you might find if you delve into it, that we're very much bond traders. And so, anyways, the yield on the 10-year is still very high. Remember, it was 4.3 a couple of weeks ago, then it dropped back below 4.2. But I really want that to be like 3.5. So, anyways, there's still shows one of two things. Either there's some risk off, or maybe it's healthy in the long run. Maybe this is a steepening of the yield curve. Remember when we were worried about the inverted yield curve? Maybe it's a healthy yield. I don't know, but nonetheless, it's showing money coming out of the bond market. So maybe it'll go into the stock market. Maybe it'll go somewhere else. Oil is up, gold is up. And by the way, the reason this price is off turns out that it's just they're simply using a futures contract, not the spot price. So the developers are, I don't know, doing what they do, coming up with excuses why you can't use a spot price. But, anyways, that is a futures, the most, that's the front futures contract. S&P 500 still elevated over 45 hundo, which is interesting because we have a little bit of risk off going on. Now it's kind of because that China is on the precipice of total financial disaster or economic disaster, and Europe ain't getting any better. So, but It shows like without all that being said, S&P 500 is just fine. Shows you the flow of capital on. Euro dollar 107 and a half. Bitcoin still a little risk off. If we take a look at the gauges, we were kind of swinging from risk off, risk off, risk off to mixed, mixed, risk off. And then there was a mixed risk on, risk off. Now we're going back to mixed risk off, risk off. All right. All right. Another way of or I guess what we're trying to do now as technical analysts, not fundamental analysts, is to figure out, is this move back toward risk off a pullback or a reversal? Well, that's our job. Okay, did we spook the herd or did we panic the herd? We'll see. Take a look at, I wanted to do scatter plot and I wanted to do something else, but actually, let's start here. Um, over the last 7 days, oil is still the best mover to the upside. So is the S&P 500. So is gold. That's cool because those are things I'm bullish on. Right on. We've had a lot of volatility with the dollar. Well, remember, I stayed away from the dollar as much as possible. And then yens, we're on yens, and well, the yens took off and the yens come back, but I also prepared you for that is not uncommon this time of year. I said the risk would be that you give up. So if you got knocked out of break even, oh, that's cool. We'll set it. The next big thing, of course, is the Fed meeting. So now we're just kind of treading water between now and then. So hopefully you're not too shocked. Yields have come down quite a bit on the 10-year T note, which is great because I actually kind of need that. So it was as much as what should I say, a 4.3. Now it's less than 4.2. So that's good. That's going. There's quite a bit of risk off still in Bitcoin. I have a feeling it's just because it spiked too much. Oh, there's an ETF, an ETF. Okay. So, anyways, coming back down to reality, it still might be a buy. Okay. Dollar strong versus Aussie, dollar strong versus euro, dollar strong versus Kiwi, dollar strong versus pound. All right. So, we got some USD. Okay. That's some risk on. The yen pair seemed mostly just flat, really. Some fell a lot harder than others. And again, now that's based on relative strength. So, Canada and Australia are not on the same boat. In this case, one is slightly positive over the last 7 days, and the other one's slightly negative. But they have quite different economic conditions and factors um, impacting their valuations. Going from the longer term to the shorter term, what's going on today? What's going on right now? Take a look at the scatter plot. Okay, biggest movers here, Kiwi dollar down. Well, remember, Kiwi's the weakest and shall remain the weakest all the way to 2025, according to QuantBox. Yeah, 18 months. Yeah. Okay, euro dollar and pound dollar, weak. Not a lot, but a weak. Notice that everything over here is expected. Okay. So QuantBox looks at New Zealand and Aussie and says bearish. So Kiwi dollar, Aussie Swissy, probably Kiwi Swissy under there, Kiwi CAD. Oh, here's Kiwi Swissy, Kiwi Yen. Clearly, QuantBox thinks the New Zealand dollar should be bearish. Oh, look at that. It is. Sweet. Here's where we're off. QuantBox is off here. Commodity, commodity, commodity. So it's a risk off, at least for now. Again, we had some negative news out of Europe, negative news out of China. Like, for example, uh, a, 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 one of the largest real estate developers almost defaulted on a bond. Almost. It was a $25 million bond in like $1 trillion portfolio. It was a $25 million bond. It's nothing. So what happens if they had a $500 million bond coming up? If you struggle to raise 25, how about 500? So anyways, interesting. It's like standing on your tippy toes for hours. Eventually it gets heavy. Yeah, even if you're a ballerina. Anyways, euro up, pound up. Sweet. That makes sense. Euro up. Sweet, right? Sweet. Let's remember, I'm fairly bullish on euro because remember, there's no guidance. So the QuantBox can't predict the future. So we know from the lack of guidance that, well, they're raising interest rates. They're probably not going to stop interest rates. They won't tell us any guidance looking forward, except they will not cut interest rates. So, anyways, if the Fed in the next 12 months cuts interest rates, then euro dollar, definitely. Uh, Now, it depends on the context of why the Fed is cutting. But, anyways, so that's what's going on now. Euro strong, Aussie Kiwi weak. All right. And dollar strong. Let's pull this up and see if we got that European news from earlier. No, it doesn't go back. I'll have to look at that. Global dairy, New Zealand dollar, huh? Be interesting to see how that goes. The dairy auction. So New Zealand is likely to move today. It's already down. Anywho, yeah, Australia. I'll pop this up just for everybody. I don't know why. Oh, I guess you can't see it. This is what I'm doing here. Boom, ba-dum, boom, boom, ba-dum. All right, I'm just popping this in the. Okay, September 5th. Oh, is that today? It was funny how I must have got a couple, two or three emails. People are like, on Monday, "Well, is there a meeting? Is there a meeting? Is there a meeting? Is there a meeting?" Bro, the markets are closed. Like, be careful, bro. Um, yeah. So, anyways, yeah, these things like, yeah, RBA meeting, yeah, big deal. Anyways, there's something for you to read. So read it, love it, enjoy it. See what Governor Lowe is thinking. Okay. Wow, what great. This is actually one that I want to do. So I'm going to leave that up. I want to watch this one. Boop, boop, boom. Boom, ba-doo-doo. Boom, ba-doo-doo, boom. It's funny they don't pop it out. Anyways, cool. I'll watch that later. PMIs. So we're in that period of where we go through like all these little scorecards of how everything is doing. So we're going to just get like a steady stream this week of mediocrely important news. I think we'll just keep confirming trends, but there's lots of sort of medium news this week. Thing to really pay attention to. All right. Anywho, so let's go back to scored card summary. So, I guess I should make this a little bigger for everybody. There we go. So I'm looking at things like oil is got a very, very strong um, technical trend here. Seasonality is favorable. Sentiment is great. COT is great. Okay. Got some dollar strong, still some dollar strength. We haven't moved into a full risk on mode yet, but it's seasonality would say we should expect maybe some bullish to appear this time of year. And we're talking about, a 3 or 4, I think I said a 5 week window is what I prepared you for all summer, and we're only into like the first week and a half or something of this 5 week window. So patience and discipline. This is the US stock market, the S&P 500. And right now we had our nice little dip and then regrouping. And so we're kind of back to where we were a couple of weeks ago. So we had the big fall, which was expected, fade actually, and then a recovery, double bottom third week of August as expected. And so now the way I look at things is higher high, higher low. That's it. That's all. Nothing more complicated than that. Plan B would be here. And you end up getting like, oh, well, those are the pivot points. Yeah, those are the pivot points. I know the catalyst is going to be the Fed meeting at the end of this month or near the end of the month. And the market will either move based on the anticipation of what happens at that meeting, or it'll wait until the meeting and then move based on what we've learned from the meeting. But the meeting is the catalyst. And to a long term institutional investor, you wouldn't even think of your portfolio. You've already designed and constructed your portfolio based on what you anticipate to happen. And you're making decisions that last, let's say a decade, not an hour. Right. So, anyways, you've already put that thought into it. So, nonetheless, here's our idea double bottom. Oops, didn't want that. Let me get rid of that. Double bottom, which we've predicted in January would happen in the third week of August. Then it occurred. You see what this is? 100-day moving average. And I believe I made it an simple. Yeah, I did. Because this is what the stock market uses actually. 100-day simple moving average. They don't use exponential. No, no, too complicated. So, anyways, it's kind of interesting. If this does end up going up, won't this 100-day actually move up and be right under our double bottom? Of course, it'll happen 2 weeks after the fact. Well, hey, moving averages are lagging. Okay. But nonetheless, I don't know. Remember, I said in the summer, your big alpha will be, first of all, did you expect a pullback? And is the pullback a fade which implies a higher high in the future, or is it a reversal? I said, that's your alpha. Nobody knows the future. And there is a possibility, right, that things are ugly and we head down here. Economically, things are ugly. Goldman Sachs says there's a 15% chance of that. Well, stop being a negative Nilly. Here's how I say it. There's an 85% chance of a stock market rally, according to Goldman Sachs. Like 85%. You remember the saying, bears sound smart, bulls make money? So, you got to protect yourself from the downside, but you also got to get into the market at some point, right? And what does seasonality tell us? September, right, is when investors return from the summer. That this fade that we saw had to do with investors removing money from the market and going on vacation. It wasn't a survey of confidence. Okay. It was a margarita by the pool. Guess what? In September, those investors come back and deploy capital again. Why? Well, that's their job. That's what they do. So, anyways, that's, this fade is nothing more of people who would rather be sitting by the pool drinking margaritas than chasing the 5A cross on a 15-minute chart all day. And then the money comes back. So now the next part of this sequence is bullish or bearish when they deploy capital. Goldman Sachs says bullish. I don't know. I'm not Goldman Sachs. But they're making their decisions, huh? So I challenged you over the summer that you need to create one of those opinions and even have little slides of maybe, why you argue one way or the other, and then actually trade them. I'm okay if you're risk off, just make sure you sell lower highs. Okay. So anywho, now there's some concern because of the ends came down, right? Well, I want you to think about this first. What is your leading indicator? What's the one thing that you're using first and foremost to measure the direction that you believe the market should be going? I like the S&P 500 because I live here. Um, what about the Japanese yen? We were trading Japanese yen pretty heavily last week, right? And the week before. Um, well, what's its leading indicator? Well, the bad news right now out of China and the yen seems to have gotten strong, but again, not across the board. So this is where it gets interesting again. How about that pound? Okay. We had that crazy volatility. Look at, like, again, the rate of change is very dramatic. We had over 3 hours of I love it though. Over 3 hours of bearishness. No. Yeah. Anyways, we're supposed to be in this for like 6 months, right? 3 months, 4 months. So, anyways, we had 3 hours of bearishness last night. Boom! But popped off my support line. It's pound. Hmm. Okay. Then you have to think, well, if you were a bull on this or are a bull on this, you'd have to be swinging back between this and the S&P 500, because if the S&P 500 was dropping and all the yens were dropping, ooh, that's very, very, very bad if you're a bull. So you would definitely want to take your money and run. Just grab all the money off the table and run out the front door. Right? Just go, go, go. Right? Yeah. Okay. So is that what's happening? We look at like this euro yen, and let's go to hourly. Okay. Oh, yeah. Massive pullback. Massive pullback. Okay. Uh, okay. Well, it depends on where you see it set, the original setup is. It crashed all the way to support. So your challenge, I think, over the next day or two is it going to fall below this support, in which you stand back and maybe find somewhere else to buy it in the future if you're a bull? Remember, I'm just assuming you're a bull. You don't have to be a bull. But the mindset is the same. Like if you're a bear in the reverse situation, you'd behave the same way. If you were a buyer, would you buy it here? Is that support? And if it drops below that, where's the next level of support? Oh, well, we have it down here. There might be one in here. So you start picking out your prices and then you wait. What do you wait for? Well, there's only two things. You wait for your price because you're the boss. Remember that? You're the boss. You're the one that chooses at what price you buy or sell. You just don't know what time. That's why you're waiting. So if price drops down to here, when and when do you buy? Well, that's all a timing issue. So you start with your price and then you deal with your time. Okay. So anyway, so we had this massive bearishness and all it did was drop to support and it held. Now, I don't know what today is going to bring. That's going to be our job. But you could, if you were a bull, okay, look at it. You see how this was resistance? Now maybe that becomes support, and maybe you look like for something like this today. If that fails, wah, 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 you take a small loss, and then you go back to waiting. Kiwi, remember, I'm not a big fan of Kiwi. I have an 18-month outlook that says down. Ooh la la. Now, this is interesting more than the other one. Why? It's using the pivot points. So now you start to, I can almost think of the word in English, but I can't find it. But, anyways, be prejudiced, I guess, towards particular currency pair and direction. Um, where you could say, if the yens are going to tank, let's say things do go bad because of a collapse in China, what are you going to do? Well, Kiwi would be one that you would sell. Target is below 85. And I'm telling you, not only is China like a ballerina standing on tippy toes for hours on end, but also holding barbells, pink tutu, and giant barbells. And her legs are shaking. Her legs are shaking. So this China could collapse like tonight. I think there's something like 1.5 billion in real estate related bonds maturing this month from China. Not all the same company, but let me remind you, was it Country Garden that had trouble last night? It was 25 million. Jump change. I mean, think about it. That's probably the price of one apartment building in Shanghai. What? Not a building. I'm sorry. One apartment in Shanghai probably sells for 25 million US dollars, right? So, like, that is nothing. And this is a company that has more buildings under construction than all the skyscrapers in Manhattan right now. Not the ones they're building. No, all of them. And it can't come up with 25 million? So how about if you took all its competition, or is the competition in trouble too? Well, in September, the competition has 1.5 billion coming up due. Is one of those going to default? You'd think like almost certainly one of those guys is going to default because they're going to be smaller in Country Garden or whatever, right? What's the other one? Evergrande? Like, so one of the smaller ones is gonna default because remember, they're smaller, so they're gonna have, their loans are gonna bonds are gonna be less liquid, or they need to raise more capital, but maybe that money isn't going to a smaller player, or they have higher rates, so they're more likely to default because they're not as big. So like somebody's going to default. So, anyways, are you ready for that? And what are you going to sell? Well, let me tell you. Let me just show you how amazing QuantBox is. Ridiculously amazing, because we have a tool up here that will help you predict the value of the currency a year and a half in advance. A year and a half. Yeah. Hang on. It's loading, loading, loading. You go to New Zealand and look at the collapse in that currency. Oh my God. And then you look at here and the biggest dog with fleas. I know this. I have the data. So if China goes down, yeah, we'll be selling off that kiwi. Okay. Right now it's on a buying pivot, bullish buying pivot. So I wouldn't freak out yet. But if we start getting a series of defaults out of China, we got very mediocre stimulus, huh? Mediocre. So if we get serious defaulting and mediocre stimulus, I'll trade the direction of the default, huh? So, anyways, we got to pay attention to that. Maybe Aussie isn't much better, but we are on a 618. So you have to ask yourself, are you a buyer and is that good enough support? Maybe it's not really great that support. Maybe it's not really. Okay. Depending on what you're measuring. Maybe you want to measure this one. Therefore, we're back to a 382, maybe on our way to a 50%. You're like, when I can barely see it. All right, all right. See, it's a line chart, and I know you're not used to it. All right. All right, there we go. So yeah, maybe down, huh? In a situation of default, 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 default. So, anyways, we got to watch. But like I said, not everyone is like, let's do this one. Not everyone's the same. Okay. So, CAD on multiple occasions here being tested. Let's go to a daily and zoom in. And still riding the 21. Every time it falls, somebody buys it. Does it have to do with money leaving Japan and going to Canada to buy oil? Could be a rabbit, could be. Yeah. But Canada's holding up. It's all right. It was struggling there for a while. Not maybe this particular pair, but CAD was sort of neutral for a long period. Now maybe this is a nice new bull run. Okay. And so you can drill in. You're like, well, let's get some research. Okay, let's get some research. Let's do it. Okay. Go to yen pairs, CAD yen. And it is bullish. Although retail traders are short. Hmm. Okay. And the complexity here is nobody's really long. So maybe retail's doing okay. The problem though, retail traders probably shouldn't be short something that is generally long and then is generally bullish this time of year. But in a month or so, this may become bearish again. So probably 5 or 6 weeks early for selling. Okay. Which, the cliche is by the time we hit the middle of October, or let's say the October Fed meeting, which is way out there, these shorts give up because, they're not loving it, right? Like, this is technically bullish, and retail is heavily short. I mean, at some point, okay, maybe they'll be right, but they're not right now, and they haven't been for a while. So when do they give up? Probably when this double tops and rolls over, huh? So imagine we were up here 4 weeks from now and we double top around 110. Okay. Then there's your down, right? So, anyways, we got to be careful with the kitty cat because of that seasonality and because of our uh general yen strength. Let's say it has nothing to do with Canada, but the yen gets strong because of the risk off. That could do it. Yeah. Oh, Denise is, yeah, the Swissy yen bouncy, 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 bouncy. Well, and it's because, you know, I think they're both funding currencies. So traditionally, I wouldn't even consider trading this ever, right? But an interesting pattern, like you say, has emerged. And so somebody's playing games, right? But if you look, like, starting really, it's this month on the bearish one. So we're talking about January. So every month this year, sold off this monthly central. Okay. Bounced off the monthly central. Okay. Not so sure about this one. But then bounced off the monthly central, 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 bounced off the monthly central. And you're like, yeah, but what about, oh my God, stuff them, right? Yeah, yeah, yeah. Yeah, I mean, it is interesting, for sure. Now, at some point, we got to be careful because if we invent it with our minds too, you know, uh, you see what you want to see. So the worst case scenario is next month only buy it because it bounced off the central. But nonetheless, it is interesting. But based on, the training course at investor boot camp, if you're a bull, you're supposed to buy in here, you're supposed to buy in here, you're supposed to buy in here, and you're supposed to buy in here, you're supposed to buy in here. And ultimately you're like, well, that's the pattern I want you to see, even more than it bouncing off the central. The funny thing is, ultimately, I really don't care that much about the monthly central. It's that zone, because I don't want us to get too obsessed with, relying too much on technicals. I love technicals, but it drives me nuts when I say, "Well, why didn't you buy it?" Well, it came within 3 pips of the 21 EMA, but it never touched it, eh? I'm like, "What? You sat there." "Well, it missed it by 3 pips." I'm like, "Oh my god." Right? No, you buy the dip. I like that idea in general, right? And so, to me, those are all dips, and I don't want to be too fascinated by the central pivot, but it is pretty funny, actually, right? Yeah, it is pretty funny. But over and over and over again, someone's just buying a dip. You can measure that 15 different ways, right? So, as long as we're buying dips, I'm cool. All right, so I think we'll leave it at that. I don't want these to be too long. But we'll do another one tomorrow and the next day and the next day. So, anyways, awesome. So, peace on earth. May the pips be with you. May your profits be above average. And if you're watching this on YouTube, swing by QuantBox.co. Try the $8 trial. Okay. And then fall in love. Be prepared to fall in love or ask questions. All right. Cheers.